Graco's stock has returned over 22% in the past year, and this is due to the fact that it is the clear market leader with a wide moat. It has solid fundamentals, and its efficiency ratios are honestly through the roof. And I think that this is the perfect boring stock that Peter Lynch told us about. It is the type of stock that it is in a sector that has low competition as low innovation, as it is not deemed one of the hype technology AI growth industries. So this could be a perfect opportunity to find the undervalued stock we had been looking for. So Graco Inc., a fluid management company. Graco defines its activities as manufacture and market systems and equipment used to move, measure, mix, control, dispense, and spray fluid and powder materials. So it uses the machines right here, or the ones you have seen in the previous slide, to help not only companies but also individuals spray fluids such as paint, water, or anything that you can imagine. It aims to serve niche markets, and it provides high customer value through product differentiation. Just as an example, in 2022, they released over 26 new products, some of them even being dashboards for data management for their tools. The Americas represented 60% of the total sales, EMEA 21%, and Asia Pacific 19%. So they are focusing on diversifying their revenues in terms of geographical extent, and they are successfully doing so. They have done significant investments and have even recurred to M&A activity in order to develop innovative products and to grow into new geographies and industries. And they believe that in their industry, their ability to compete depends upon product quality, product reliability, and of course, competitive pricing. The financial analysis is where this company shines. They have an incredible return on capital employed of 24%, which for an industrial company is through the roof, and when you compare it to its peers, it's day and night. Its interest cover is also really good at almost 60 times interest coverage ratio. They have a smaller cash conversion than the one I would like to see. They have a 66%, and usually we want this number to be above 80%. But that's good because it means that there is room for improvement for Graco. In terms of margins, they have a 50% profit margin and a 27% operating margin. Both are best in class, and both are above the thresholds that we usually look for. In terms of their growth, you can see that their revenues, gross profits, and net incomes have been growing quarter over quarter. Their margins are pretty stable, and although the growth is not magnificent, it's stable and it is for now beating inflation. In terms of efficiency, these are as good and as stable as you can get them. Just look at the return on invested capital. It's sitting comfortably at around 50%, and that is wonderful, especially for a company in the industrial sector. When moving on to the fundamental analysis, this company gets a solid 7 out of 8, which is amazing, and I've honestly fallen in love with this company over the analysis I've been doing. First of all, they have low liability risk, which is wonderful to see, and they have one of the most solid balance sheets I have seen in a long time, to the point where they can cover all their debt, long-term and short-term debt, only with their current assets. And that is an ability that only very few firms can actually brag about nowadays. They're extremely consistent with their cash flows, and they have been growing them organically. They have a very consistent dividend, which they have been increasing every single quarter, and they increased it past quarter by around 8.5%, I believe. And they of course conduct share buyback. So this is very positive on the stock, as they are giving the investor back the money. They have an existing moat and a competitive advantage since they already have a very established brand. They are one of the best at what they do, and their clients are very likely to repeat. In fact, a lot of their clients are repeat customers, and this of course gives them not only the power of having a competitive advantage over their peers, but it also allows them to have more power when pricing their products. They are capable of putting a premium to their products just because it belongs to the Graco company. And that is something we like to see in the companies that we invest in. The one thing I didn't like about the company is their organic revenue growth. As we have seen, the revenue has been growing, but at a very slow pace. And in 2023, their revenue has actually shrunk by a few percentage points. I would like to wait for the next annual report to just see how they justify this, or if they have any plans to fix this going forward. Here is their dividend. As you can see, every single quarter since 2019, they have not only raised the amount paid, but they have also raised the dividends per share. And this, paired with the fact that they do share buybacks, is improving the dividends per share at a magnificent rate. They currently hold a dividend yield of around 1.3%, which seems a bit higher than the average that they've had for the past 4 years. In terms of the long-term analysis, I believe this company could have growth potential. However, in 2023, it hasn't really been realized. I don't see any secular trends that the company follows, apart from the fact that they are trying and beginning to create their products which are more data-oriented, such as the dashboard for data management, which pairs with their products that they started selling in 2022. They have 2 avenues for growth potential, the first one being new product development, and as we have seen, they are geniuses at doing this, as in 2022 alone they released over 26 new products, and in 2023 they have also released many new products. The second growth route that they have is through geographical expansion, which is one that they have been focusing on for the past 5 to 10 years. And as we have seen, only 60% of the revenues come from the Americas, so they have successfully been funneling at this. However, they have more growth opportunities in Asia Pacific and in Africa, which they could exploit in the near term. In terms of valuation, it seems like it's trading at a bit of a discount if we compare it with its historic PE ratio since June 2020. However, I think we could get it at cheaper prices, as if we use the free cash flow from 2022, the yield comes at 1.26%, which when compared to the 3% long-term inflation rate, it deems that the company is not at an attractive price. In terms of risk and possible challenges, the biggest ones I see is competitors and performance. I put competitors at a 40% because I believe that even though it's in a boring industry, if they are not careful with their products, are not launching new products every year, and are not focusing on improving their offerings year after year, they could get hurt with competitors. However, since we have seen that they are very carefully releasing new products and improving their offerings, I don't think this is a big risk. And in terms of performance, I would just like to read the following annual report to see what are their plans on increasing their revenue and obtaining that revenue growth that they were having for the past years again. Before we move on to the investment conclusion, please remember I'm not a financial advisor and this is not financial advice, so please do your own due diligence before purchasing the stock. This company has a great moat and a strong competitive advantage. It provides consistent cash flows which are not only predictable but are also resilient, and it has a very high return on capital employed when comparing it to its peers and the average in the S&P 500. So this means that this company is amazing at creating value for the investor. In conclusion, I would say that this is a very good company, which will be a great investment if revenue starts growing again and they can get that little issue sorted out. So thanks for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there is a link in bio for a free stock when you join Trade Republic or Trading 212.